In terms of thinking about the recovery, Matt, you actually break it out into three waves, which make a lot of sense. Basically, how life will be going forward and what you'll need for that new life. So can you sort of go through this for us?
Yeah, Melissa, I think the key is that the consumer was in a very good place before the pandemic. We were bullish heading in, but there were winners and losers across retail. I think coming out on the other side, to your point on this three-wave recovery, we're seeing the beginning of preparation buying. You have return to work, return to occasion, which will follow. And then you have the travel side, leisure, and global tourism, which I think is probably a back half of this year and into 2022 event. So this isn't a 3 or a 4 month opportunity. I see this as the next basically 18 months of recovery. We're seeing it across multiple areas. And going back to that consumer, strong consumer before, but now we have debt service ratios at 40-year lows. We have cash reserves, and you have a consumer that I think benefits from a wealth effect on the other side, not to mention the potential stimulus that you just mentioned.
Yeah, and the stimulus will slowly work its way through the system, surely, so it might not be for months. What interested me about the personal income numbers also, Matt, was a savings rate. The savings rate was at more than 20%. How should we think about, as we emerge from this pandemic, Matt, not just income and a return to work, but also the savings that consumers have? Do you think that part of that will actually be deployed into some of the companies, some of the stocks that you cover?
I do. I think you're going to see a tremendous amount of pent-up demand. I think it could be explosive in nature. So if you think about the dynamics of the consumer before versus after, to your point, you have the savings rate, and now you are layering on $1,400 checks, which on our math could be up to 1,200 basis points of same-store sales benefit. That's versus 500 basis points in January and relative to 700 basis points if you look back to stimulus round one. So to me, the consumer picture underlying had strength before. You're now coming out with a consumer that, if you look to some of the companies that have reported recently, they're talking about lower delinquency rates. The credit metrics look good across the board. And so it's really now a factor of the pent-up demand. Our strategists here are calling for an effective end to the pandemic in 30 to 60 days, which to me means that this may be a second quarter event, which initially even we were thinking was more of a third quarter and fourth quarter event. So I think this pent-up demand, barring that there's no hiccups here from a vaccine or from a COVID dynamic, could be a lot sooner and a lot more around the corner, which would mean there's opportunity across my space, which is basically the epicenter. We're calling for a barbell approach, I would say, on the value side. I want to own names like LB, American Eagle, The Gap, Tapestry, but then I also want to own some of the other side, which is quality growth that comes out stronger. That to me would be Nike, Lululemon, Dollar General, so more in that discounter world, as well as athletic and athleisure, which did well during the pandemic, but comes out stronger.
Why should a Nike and Lululemon come out stronger post-pandemic? I mean, haven't people bought their share of comfy clothes?
Yeah, I'd even expand it. Look, I think one of the bigger themes coming out of this is going to be casualization. So yes, they were more resilient on a relative basis during the pandemic, but I think they take market share, they take shelf space coming out. So as I think about Levi's and denim or Nike and Lulu and athletic, I think the world coming out is more flexible. I think there's a return to work, but there's a more casual side to this. I think that as people move and venture out, you'll have that combination which fits directly into that barbell approach where we want to own handbags and accessories, which would be Tapestry. We want to own some of the more formal wear. We want to also be there because I think the total addressable market of athletic, but more so of casualization coming out, given a more mobile consumer, I think is larger. So again, that fits into that barbell approach that we're taking where we want to own quality growth, but I think there's very much so value opportunities on the other side of that coin.
Shepard Smith here. Thanks for watching CNBC on YouTube.